With the insane price action that we've seen with GameStop stock and with Dogecoin, there is a new kid on the block, and his name is AMC. And in today's episode, we're going to talk about whether or not it's a good idea at this point to buy AMC stock or not. So without any further ado, let's dive into today's episode. Let's go. All right, it's official. AMC is now the best performing stock in America. And in this article, Stephen McBride says something like, don't buy it. And it's hard to not agree with him, because when you have something that has had such an exuberant run like AMC stock very, very recently, you kind of want to avoid buying something that has already had the run. As an investor, you want to find the next best thing. And that is kind of what he goes into in this article. And we'll get into that in just a minute, but let's look at the actual fundamentals of the business. So if you look at the financial performance, right, the annual financial performance, obviously 2020 was an absolutely rough year. But when you look at the financial performance, it was already kind of leveling off from 2018 to 2019. 2020, pandemic hit, we had a lot of shutdowns, and the company pretty much went into turmoil from there. You would think, okay, well, March of 2021, everything's back open, but yet we still have a huge decline in the net income for AMC. But yet the actual stock price has been doing really well. Now, if you think about it like this, well, this is the short squeeze that everyone has been talking about, and that is why the price has shot up so much.
In the last 5 trading days, it's traded 3.2 billion shares. There's only 512 million shares of AMC outstanding after today's 11 million share sales. So the idea that this is just people holding on to the stock and like they're never going to sell, just explain, like, how is this thing traded 3.2 billion shares? The amount of volume, I mean, it's the most traded stock in the entire world over the course of the last month. This thing is trading like liquid. There's no short squeeze. I mean, a short squeeze is when you can't get out. Like, there's not, where the short interest is so high relative to what it's trading. Anyone could be out of their short position in 4 minutes. Like, there's no liquidity issue here. This thing trades like water. And so I think there's a bit of a misperception that what's really going on is just retail buying from other people in retail. And, sort of what was just being discussed, like, someone's making a lot of money here and a lot of people are going to be left holding the bag, because at the end of the day, the fundamentals here just don't support the valuation.
In fact, from just May 21st to June 2nd of the same year, we had a 417% increase. Absolutely incredible. Now, if you were part of this ride, congratulations. Now, if you weren't, don't worry, you didn't miss out on a lot. If anything, there was a lot of pain that came with the gain, meaning a lot of people sold out intraday here, or maybe you saw this price crash and then you're like, oh my gosh, I need to get out. There was obviously a lot of money to be made, but also some fear in terms of, hey, should I buy more? Should I sell? Should I hold on? Nobody really knew what was going on. And that is why it's maybe not a good idea to just continuously buy this stock or even hold it for the future. Now, I'm not saying this as investment advice. In fact, don't ever listen to anyone on YouTube, including myself, but take a look at AMC, okay? So this is a stock that has a $27 billion market cap that is earning roughly, let's just, look at the last year's revenue, and that was $5.47 billion. Remember, $30 billion in market cap and $5.5 billion in revenue. Now, Cinemark, it's a smaller company, okay? $2.63 billion in market cap. So when we're talking about market cap to market cap, we're looking at something that is pretty much 10 times, a little bit over 10 times cheaper as far as market cap. But yet they brought in 2019 $3.28 billion. So a little bit over half of AMC's revenue, but at the same time, they only have a market cap of $2.63 billion. So fundamentally, if you're thinking about investing into AMC, you can see why this is a bad idea. Let's talk about the article we saw earlier. Back in January, shares surged 300% in one day. AMC is the top performing stock in America this year, up an astonishing 2,230%. This is talking from the lows. Now, if this sounds familiar, it should. AMC pulled a similar move 5 months ago. Back in January, shares surged 300% in one day and a mind-boggling 870% in 3 weeks. So why is AMC suddenly soaring again? It has nothing to do with America reopening or the newly released box office hit A Quiet Place Part 2. AMC went ballistic for the same reason as before. An army of young traders are using social media to pump it up. In short, thousands of traders flocked to Reddit forum Wall Street Bets and touted AMC, convincing anyone they could to buy the stock, all in an effort to stick it to the big hedge funds that bet against AMC. Now, AMC is rewarding these traders with free popcorn. Whoopee! But in general, this is just absolutely insane, right? It is all based off of speculation. Now, obviously, most stocks base a lot of their actual price of the stock on speculation in general. So this isn't something that's new. It's just new to who is manipulating the price versus who has been doing it for years in the past, which is hedge funds, right? So when you're thinking about this stock, do you think, am I being played? And yes, you are. If you think that the squeeze hasn't happened or that the friendly Robinhoods will help you continue to pump the stock forever, you are gravely mistaken. Don't waste your time and money trying to front run the next high-flying meme stock. AMC, GameStop, BlackBerry are what we call bottle rocket stocks. I completely agree here. And in other words, they may shoot up fast, but because their underlying businesses are poor, which we saw earlier, they're practically guaranteed to come crashing back to earth. Take GameStop. After soaring earlier this year, it went to fall 85% in a month. Now, that doesn't mean that the stock didn't go back to almost all-time highs again. And in fact, it's holding around $200 per share at the time I'm making this video. But the question is, how long is that going to last? Maybe a few months, maybe a year, but at some point it will come crashing down. And you don't want to hold an asset that's, one, extremely volatile, two, controlled by the unknown, and three, has a bad business model. Unless you're gambling. If you're gambling, I mean, at that point, just take your money to the casinos, blow it that way. Why go through this headache of, having a Robinhood account? You can just literally walk down the street and, go to a casino. Now, unfortunately, many investors see the stocks soaring in the news and decide they want in on some, easy money. So they pour in money blindly and get burned. Now, please, for your own sake, don't chase bottle rocket stocks. Now, again, not financial advice. Just be careful if you do plan on making, I wouldn't even say a financial decision. If you plan on gambling, just know that it's not investing. Ask yourself, would you be comfortable owning these stocks 6 months from now, 1 year from now, 2 years from now? The answer is no. Their businesses are likely on their way to zero. Now, we know some investors don't really care about that. They just want to gamble and get involved in this exciting story. And if that's you, please make sure you keep your position sizes in these stocks small. You should be prepared to lose your entire investment. That is, of course, said with any investment, but especially with these. And keep in mind, there will always be another AMC and another GameStop in the future.
What's the number one reason at this point, at 60 plus bucks a share, AMC will go higher?
Ooh, the number one reason.
Obviously, when you're talking about AMC, not only have their theaters been closed for a long time, and that caused a decline in sales, but in all reality, the convenience of watching movies at home has gone up drastically, which is another reason why this stock will likely never recover fundamentally. And the crazy thing is, not only is it more convenient, but it's even cheaper to watch movies at home. And Amazon is a perfect example of showing that if you give the consumer something that is cheaper and more convenient, they will take it hand over fist. So I'm not saying that movie theaters are doomed and you shouldn't invest in Cinemark, AMC, or any other company when they're at a decent valuation, but I am saying that the movie market as a whole might have some hoops to jump through in the coming years as a lot of the movies go online. So anyway, hopefully you guys enjoyed this video. Again, not financial advice. These are just some of my personal opinions that I found I should share with my fellow audience. And as you guys know, I'm a very long-term investor. That is why I don't like gambling, and that is why I don't really partake in these types of investments all that much. If I ever do, it's always less than 1% of my portfolio. So I hope you found this valuable and a little bit entertaining. If you did, don't forget to smash the like button. And if it's all the same to you, don't forget to subscribe as well. That way you help out a small creator like myself and you get access to more great content like this. And before you go, make sure to check out all the links that I have down in the description below for all the free stocks that you could earn from WeBull, Robinhood, M1 Finance, Stash, and even Public. And without any further ado, I'll see you guys in the next episode. Peace out.